time for our Smart Charts with Taylor Riggs, where we look at timely topics through the charts with the Street top technicians. Taylor.
Thanks, Caroline. And joining me today is MKM Partners Chief Market Technician, J.C. O'Hara. And we wanted to first start with a very interesting chart. This has been catching my eye because it looks like we're sort of in this support zone, and then we're looking at 50 and 200-day moving averages, really providing key support and resistance levels. Walk me through what you see.
Absolutely. Thank you. So we wrote a note earlier this week to our clients, and we call this zone that we're in the death zone. And yes, the connotation's pretty scary, pretty negative, but we don't want to sound too negative here because we're not bearish yet. But there are certain key levels on the chart that we really want to pay close attention to. So again, for anyone who's ever climbed a mountain, the death zone is the area right below the summit. And it's scary because, one, you're running out of oxygen, a lot of mistakes happen, the terrain gets steeper, the risks increase, and I think that's exactly where the market is right now. So risks are increasing, so the levels that we really want to pay attention to are the 50-day moving average and the 200-day moving average. And they're very simple, but they're great guides of trend. And you could see over the last year, they've kind of flattened out here. So we're in a market that's trendless. We have the 50-day at 29.40, 29.50, and that's providing strong resistance. And then right below, we have a flat 200-day moving average. And if you look back here, that has been a pretty good guide for support the last few times. So we tested it once, we tested it twice. So as long as we're above it, we're going to stay bullish in our call. However, cautious because we are stuck under the 50-day moving average.
Well, very interesting. And there's another sort of big story that's been catching my eye, and it is money market funds. Cash balances there are now the highest going back since 2009, which to me seems like people are getting a bit more cautious. What do you see?
Well, absolutely. When people get more cautious, probably because risks are increasing, either volatility or global political macro, or just I don't know what to do with money right here, right? Where do you put your money? You go into money market funds.
Right. So walk me through.
So we have a chart over here looking at the S&P on the top panel, and I'll jump right over here to show you. We have assets in money market funds. And it's kind of been steady over the last few years, but over the last 18 months, this is when we really started to see the flow of money into these money market funds really start to accelerate. And to put this in context and to show you just how fast where this is accelerating, if you apply a 20-day rate of change, so how much money is going in over the last month, the rate of change is actually the highest since the financial crisis. So there is a strong gravitation from money managers to put money into these safe money markets.
And I want to flip up the board one more time and get in one more terminal here as well, because you're also sort of taking us, where does this leave us? Like, what do I actually do with this information now? What's your take? Are we just go neutral forever?
That's right. Well, we could go to cash, but a lot of clients say, I need to be in the market. I need to have market exposure. So what do I do? Well, one strategy that's really working out is a market neutral strategy. And on the top panel here, we have a basket that goes long, low beta stocks, and short, high beta stocks, right? Because it's that risk-off trade that's really been working, and it's the high flyers who have really been punished. So you make a market neutral basket like this, and you actually see back in 2018 here, at the end of the year, we saw the market sell off, and this risk neutral basket really start to outperform. Move sideways for the majority of this year so far, and then all of a sudden, we're starting to see it accelerate again. And you could really see the acceleration on the bottom panel because it's this market neutral basket relative to the S&P 500. So you could really see it's really starting to accelerate, which means you're outpacing the S&P 500.